Good morning, welcome to this weekly market update from AGM Markets. There's the 22nd of August 2014. What I'm going to do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just going to review what's been going on in the markets this week and give some sort of outlook for next week. For any new followers out there, we have three moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple moving average, and the gold is a 200 simple. I'm not making any trade calls recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.agmmarkets.com, that would be most appreciated. Okay, let's have a look at Euro. So what's been going on this week? It's basically continuing to slide down. The fib that we've been speaking about is this one here. So this is from the low of 2013 to the high of 2014. You can see the last sort of 3 weeks we had tests of the 50% and of the the last 2 weeks we had tests of the 100-week moving average, closes above the 50%, but significantly I think has been these closes are below the 200-week moving average. The 200-week moving average has been capping Euro Dollar, and you can see this week it's just really struggled to hold above, and it's just sliding down. So 61.8 is the next sort of key support, I think, and that comes at one spot 32.23s. So yeah, I mean, and then the other, I mean, a lot of people look at this fib. I'd have thought the big term, the longer term players, and that's a perfectly valid move. So I mean, we're still way away from that. 50% comes at one spot 30.17. So maybe that's the key fib. But in terms of shorter term stuff, I still think this is an interesting move. Bear in mind, we've already had some action at the 50%. So a lot of people are obviously looking at it. But no, it's all about, well, I mean, we could get some weak, I think there's some US data out today at 1:30. I think Yellen might be today as well. So if we have any sort of weak US dollar stuff, then we could easily get a strong close above, but it is looking unlikely at the minute, but you never know. So in terms of moves towards this, so in terms of this daily chart, what have we been speaking about? Is well, first of all, we had this fib move here. This wasn't off for 50%, that was off 38.2. You can see there, coincided nicely. I think it was the 137 marker. Yeah, pretty much 137 handle there to the pip, and it rotated towards the downside. So the next fib move, if we get some sort of bounce, I think it will be very popular, be this one there. So it's just taking the high from that move and the most recent obvious swing low, which is currently that. Not saying it's going to hold, but just in case it does pop up over the next sort of week, then this 50% comes at one spot 34.71s. And interestingly, the 50-day moving average is coming around there as well. So yesterday's daily candle was quite a nice reversal candle off of the 32.50s. So I'm going to change it to pink for sort of 50 pip increments. So 132.50s. You can see their key support going into today and sort of the rest of the week really. In terms of next week as well, I think it'll be a key sort of line in the sand. Interestingly, we had a 4-hour closes below, and it closed above. But in terms of daily, there you can see a nice spike of that 132.50 close above, and it's trying to push up, but it's sort of struggling. You can already see there's an upper wick on today's candle already. So, but you never know. If we get some weak US data, then we could easily pop up here. But it is looking quite heavy, and it's just been sliding and sliding. As you can, it's pretty self-explanatory on that daily chart. Okay, let's look at cable on the weekly. What's going on? Similar to Euro, continuing to slide down. But what have we been? I mean, so it's 6 weeks. In last 6 weeks have all been red candles. This is the 7th week. But you can see last week I said keep an eye on this 50-week moving average. This is the first sort of target I would have thought for the long-term bears. And you can see we're currently, well, it hasn't quite tested, but pretty much on this 50-week moving average as we speak. First sort of small fib just from this, so that's from the year low to the year high. Keep an eye on the 166.10s. I mean, the key line in the sand in terms of round numbers is the 166. So you can see that's pretty much where we're sitting at the minute. So that's the key sort of bull bear line. Interestingly, we did get daily close below that yesterday, so do not be surprised to see it act as resistance today, and it's likely the key line for it to sort of have a grind lower. If we do continue to grind lower, and this is the fib I've been speaking about for some time in terms of sort of perspective and an overall bigger move, this 50% comes at 160, so of course we're still 600 pips away from that, but it's definitely good to keep it in mind because it does look like it wants to come down there towards the sort of 200 moving average, the 100 as well. But 50 is definitely the key support, I think, at the minute, and the sort of 166. I mean, you've got 164.50s as well to keep an eye out for, which is obviously just below in terms of key sort of round numbers. And also, I mean, keep an eye on these. You can see these sort of 2012 spike highs. They come in at around. I mean, they're quite a way away. It's about 163 there. You've got, that's a key resistance level, could act as new support. Of course, we're still some way away from that, but that'll be interesting if we do get there. In terms of shorter term time frames for the daily, nothing much to talk about in terms of daily, because you can see it's just been sliding lower. So it's all about just selling any sort of aggressive, any sort of brief sort of bounce up. Really, we have 168s. It's a nice round number. You can see that acts as nice resistance there, and I think 167s as well. So in terms of cable, the way I've just been looking at it is, I mean, that's a key previous support. This 167's turned into new resistance there. You can see it's just been selling off any sort of a bounce, to be honest with you. Nothing major to talk about in terms of shorter term stuff, to be honest. That's pretty much it. It's just sliding lower and lower. It's all about just keeping an eye on these big round numbers here. In terms of fib moves, the next fib move, I personally look at this sort of small swing high, that small recent swing high there. This was one actually in focus, but it didn't quite come up to the 50%. It just got sold off. So the next move I personally looking at for is this one here. If you're looking at the sort of the 1 hour chart, the 4 hour, 1 hour, you can see it quite clear there. So actually, what am I talking about? That was a fib move that played out this week. I knew there was one. That one there you can see on the 1 hour. So swing high on the 1 hour chart, that's swing low. You can see we've got a spike. I think we had some good UK data that popped up. I think maybe manufacturing, I can't remember now. It was earlier in the week, so we had a pop up, 50% spike lower, and it closed below, and we rotated towards the downside. So the next one to look out for in terms of this 1 hour chart is this move here, in my opinion. Of course, it needs to get above this 166. You can see yesterday a nice sort of reversal candle at that 166, and had a brief decline for the rest of the afternoon and towards the evening. But you can see we're already sort of trying to bounce up at the minute. That one hour reversal candle there, off of sort of yesterday's supports. We're sort of rotating higher at the minute, but do keep an eye on that 50 hour moving average as well, because that could easily cap it. But in terms of fibs, in terms of smaller term fibs, and in terms of the shorter term time frames on the sort of 30 minute 1 hour chart, that 50% comes at one spot, 66.22s. Okay, let's have a look at dollar Swiss. What's going on? It's continuing to grind high. We spoke about last 3 weeks. Some big upper wicks were posted on those candles, but I said do keep an eye out, because it may look like it wants to grind hard towards these sort of moving averages, and of course we're way away from this fib still. So that 50% comes in at 0.9268. That's the fib from 2013 high to 2014 low. And it could easily get there, but it looks like it wants to continue to grind high towards these moving averages. So you've got the 200 and the 100 there. And in terms of the daily, interestingly, of course, we spoke about this fib move here, which came off the 50%. If you extended your low there and then to that high, that was the next move there. It may have wanted to come down to the 50. It was looking like it wants to come down to the 50%, but you can see it got bought off of that sort of previous high there. So previous resistance turned into new support at the 0.90 sort of 25 30s there, and we bounced up. So in terms of fibs, you can still look at that same one, but in terms of the smaller short-term time frame, sort of 4 hour, 1 hour, you can see it really. Actually, let's flip it to the 4 hour. This is a very good opportunity, I think. I mean, it may not come down to the 50%, but what's quite interesting is these These highs you can see around where I'm hovering over my cursor at the minute coincide with a lovely round number, which is the 0.91, so that could be a big sort of option expiry level. So I don't know, not 0. There you go. But you can see it clear up in the data there. 0.91 coincides these big spike highs here. If you flip it to the 4, we had a few sort of fake out closes above, but you can still see it's still a key resistance level. So previous resistance could turn into new support here, and that actually, I think it coincides with the 38.2 fib, which I'm going to draw on my chart now. So you can see that it lines up bang on the 0.91, so that's a fib that I'm personally keeping an eye out for, and I think will be very popular amongst traders. Yeah, you can just see it there on the 1 hour chart as well, so you can see this sort of 50 hour moving average is currently capping dollar Swiss, and it looks like it wants to come down to that 0.91 definitely, so that's one fib to keep an eye out for, I think. Let's flip it to Aussie on the weekly. What's going on? It's still holding at these sort of what's the level now? 0.92, 92.30s there. Key level on the weekly chart. Multiple tests and holds above this 0.9230s. And you can see this weekly candle is currently looking very bullish. So keep an eye on the weekly close. I think it's quite interesting. If it closes bullish, then I think the odds are for a rotation towards the upside in this 100 sort of week moving average. But of course, it's got to get above this massive weekly resistance at the 0.94 20s there. We need to close above that if we're going to get anywhere near that 100 week moving average, because otherwise it's just continuing to chop in between this sort of 200 pip range that we've been speaking about for most of the year now. So that's still the view on the weekly. In terms of the daily chart, of course, those levels are still in play, but in terms of sort of key round numbers, you've of course got 0.9250s has been a key support in terms of the daily candles there. So, well, this week especially, we've had 3 daily tests, pierces below the 0.9250 and closes above. Yesterday daily candle is a lovely reversal, very strong lower wick on that. So do not be surprised to see it grind higher here towards the sort of 0.94s perhaps. To change that actually to the round numbers to keep it nice and simple. So you got the 0.94s there, previous resistance around here. So the round numbers have been really good on Aussie. As it's been chopping around, it's all about just playing these sort of key sort of supports, key resistances, and just trading the range. To be honest with you, it's simple stuff a bit. If you just look at that weekly chart, it's just going absolutely sideways. But there's still plenty of opportunities, even on the sort of the shorter term time frames here. So just a 4 hour now, you can see lots of sort of spikes, lots of candle reversals. I mean, look around there, that 93.35s, lovely price action there. So yeah, it's still just trading inside of this range on Aussie, nothing else major to keep an eye out for. But I do still think the bias is towards the upside, especially if this current weekly candle closes out, because it does look quite bullish. Right then, let's flip it to gold on the weekly. It's starting to grind lower on this gold. It's struggling to hold up. What have we been talking about is the 2 major fibs in terms of supports. You've got that one there. That's pretty much where the low of last year to the high of this year. The 50% was a key previous support. You can see the sort of 1286s. Look how many candles have pierced below and closed above. So keep an eye on this weekly close today. If we get above that, and I still think the bias is towards the upside, but it is looking quite heavy. Also keep an eye on the 50-week moving average as well. Then the other fib that we've been speaking about is this smaller one here. So I'm just going to get rid of 38.2s to clear out a bit. So you can see there, well, this smaller fib, you can see this 50% has been the key level. We spoke about that last couple of weeks. You thought, well, I personally thought after that candle there, I thought the odds would be to get some sort of rotation towards the upside, but you can see it's just really struggled this week and it's just been very heavy. But I mean, it does look like it was going to close above the 61.8. You can already see the buyers are coming in on gold and try and sort of form some sort of lower wick there, but it's quite an interesting one. I think the weekly close will be very interesting. So if we close below that 61.8, then I think the odds are for some sort to a move towards the bigger 618 here at 1262s. I mean, yeah, it's very data dependent. I think if you get any sort of weak US data, then I think gold could rotate towards the upside. But that's pretty much it. I mean, in terms of the shorter term time frames, it's all about those same sort of levels really. So you can see that fib there's been one that's definitely been in focus. And I mean, the reason why we have been struggling is because you have to remember this this fib here, which is the sort of counter move of that one. You can see the multiple tests are sort of 50%, the 61.8. This sort of 13-12, so we've closed below, which just rotated towards the downside, and that move is now complete. We've closed below that 0% line, so they're the moves. It's all about the key levels really. I mean, the way the way I'm personally sort of looking at it, I'm just drawing the keeping both fibs up, so you've got all the levels on the chart there. So in terms of a shorter term time frame, sort of the 1 hour, 4 hour, etc. You can see the level is pretty much self-explanatory. You've got that nice move there, the 1292s. You got this sort of key resistance, which is currently holding out in a minute. So that's pretty much it on gold. Nothing major to note. I mean, you can currently see on this 4 hour chart actually, lovely sort of base in here at this sort of 1275. So in terms of a key sort of round number, in terms of a key round number, 1275 is one to keep an eye out for. I think that's a lovely support already here. You can see on this 4 hour chart, lovely hold of that level, and it's currently keeping up. But you can see the 1280s is already acting as resistance, so previous support turned into new resistance. That's why I'm personally keeping the fibs up on the chart. Okay, then that's all for today. I hope you found that video useful. If there's any other pairs you want me to take a look at next week, then feel free to comment under the YouTube channel or send us a tweet to our Twitter feed, which is at AGM Markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.